Okay, hello traders and welcome to another FX Evolution video. My name's Thomas Atkinson and today we're going to be talking about a very important concept, and that's spreads and swaps within the Forex, commodities and indices markets. So let's get straight into the video. All right, well here we have the Euro US dollar 15-minute chart, and obviously a very, very heavily traded pair. Now we're in the MetaTrader 5 platform, very importantly, and if we right click on the screen, go to trading and click on new order, left click here, you'll be able to bring up the order window and you'll see basically two lines here on the left hand side and some price here, which represents these prices. Now if we were looking to buy the market, we would be getting this price. And if we were looking to sell the market or profit from short selling, we would get this price. And this is the bid and ask prices. The difference between these two is the spread. And this is very important that we always look at a window like this or an indicator before placing any trade. Now, if we have a quick look at gold, what happened recently is that gold during this point of high volatility may have looked good on this left-hand side, and you could see they were kind of close together, let's say. But the actual price between the bid and the ask was very, very high. So rather than it being, let's say, around here, which is 0.3, 0.35, that type of spread amount, what we were seeing is we were seeing $2 spread. And you wouldn't necessarily have seen it from just this tick chart window, but you would have seen it by just doing a quick calculation. This number is obviously different to this number. What's the difference between them? And that is effectively the spread that you're going to be paying. Very, very important to do this every single time you place any order, whether that be an indicator, whether that be something like the Pepperstone advanced trading tools or your broker's advanced trading tools, but always check, because the costly mistake of not realizing your spread can be very, very high. Quick top tip, if you're trading indexes or indices outside of their main market trading, so that is if you're trading the ASX 200 and it's between 10 a.m. and let's say 4 p.m. when the market's open, you'll generally have a very tight spread. But if you're trading it outside of the general market, so if we go here and go new order, you'll notice that the spread here is around 3 to 4 points. During market open and market close, that period of time, usually it'll be 1 point. So again, might look kind of close on the order window over here, but this is the calculation you should be doing. And just always do that, get into the mindset, because when you're trading 100 contracts, 10 contracts, whatever it might be, even one contract on Euro US dollar, it does make a difference. And if you don't realize what the spreads are, you can get stuck very poorly in terms of a bad position. So that's spreads. Now, the next one I always get asked about is swaps, and what the hell are swaps, and what is happening with swaps. So if we right click on a currency and go to symbols, it'll bring up this window, and we can see here all the different things that are offered in the Pepperstone MT5 platform, but it doesn't matter which platform you have with MT5, it'll all be the same thing. So we selected Euro US dollar here, and you can see that we've got all these things in terms of spread, stop level, everything. The most important parts of this when you're looking at it is to look at the contract size, okay? So I'm just gonna highlight that, contract size and the size here. So this is $100,000, okay? So contract size of $100,000 is one contract in terms of the platform. Very, very important, one contract. So if we were to open one contract of Euro US dollar, these numbers we're about to talk about down below here are relevant to that particular contract size. Obviously, if you open two contracts, it would be double the swap. So here we have the swap, and this is realistically the difference in terms of interest rates between the two currencies, or that's what it's meant to be. It's not quite an exact science. If you went and did an engineering kind of analysis on it, you'll find they will be slightly off. But in essence, if we are shorting or selling the Euro US dollar, every contract we have open of the Euro US dollar, we will be making 72 cents per contract per day, okay? If we're long or buying the Euro US dollar, then we will be losing $4.53 per day, okay? That's the important part. Now, the next bit that always gets people is what they call 3-day swaps. So obviously, you could be holding a position over the weekend, And brokers will charge for this position swap, and it will be on different days of the week. So you really want to come and check out your currency pair that you're considering trading. If you're considering trading it, let's say for a longer period of time, or at the end of a New York close and the start of maybe an Asian session, because on Wednesday, you will be charged 3 times these amounts. So 3 times this amount or this amount in the morning. And that's important because that's basically charging you for the 2 weekend days plus that 1 day of swap. So if you're scalping and you get charged $4.53 times 3, that's not going to make you very, very happy, I'm sure. So do be aware of the 3-day swaps, and this will differ depending on the pair that you're trading. So if we have a look at another, let's say metal, and we have a look at gold, we can see here contract size, this is based on 100. If we scroll down, you can see here swap long and swap short, and they're both negative in this case, and again, the 3-day swap on Wednesday. So the most important part of all of this is always check the 3-day swap, the positive swap or the negative swap for each side before making a trade, and of course, check that spread. And if you check that spread and you check these swaps, then you won't have any of those kind of nasty things that happen to you when you're trading. We will be creating more videos in the future, and I'll be talking about specifically spot contract CFDs versus time expiry CFDs, another trap for a lot of people, especially when trading soft commodities and certain indices. So we will be talking about that. So make sure to subscribe, like, and comment on the video, and we'll be back soon with another video. Thanks very much, guys.